There's a reason why we take trades, and I wanted to show you guys what I saw that made me send those trades and made me take them. You understand? So, what did I see in particular? Now, Gbpusd. Can I get this off? Okay. Gbpusd is bearish, right? Gbpusd is bearish. How am I saying that? Why am I saying Gbpusd is bearish? If you look at it from the daily time frame, I'm just speculating this, but it has an habit. Who's that person? So, mute yourself. It has an habit of retracing back to the other block that originated the whole move. That's why. Stop annotating on the screen. Oh, God. It has an habit of retracing to the downside from the other block that starts it. That is why I'm actually selling Gbpusd. I'm on the sales for quite a while. So that being said, now the 4-hour time frame, let me show you something. The 4-hour time frame, we broke structure to the downside here. Now this was a pattern movement, right? Up, high, low, high, low, high, and we broke this low, meaning that yes, it's ready to what? Change character and all of that, right? This was the first low. You can see that we broke this low, meaning that it's ready to change character and gave you inducement, and it took the inducement out and it's reacting from wherever here, something here. Price taps it, and this is its target for me. Since it's moving down, I believe this is its target. This guy. I believe this is its target. So I'm on Gbpusd sales for quite a while. I only look for the sales most times, right? Only look for the sales most times. After I saw that shift to the market, shift to the downside here, I knew that okay, it's time for us to start selling Gbpusd. And that's why I've been selling Gbpusd. Now, looking at the current structure and everything that is happening, right? Let's clear everything. Let's just clear everything so that we won't get confused. So price reacted from maybe an order block around here, right? And it gave you this push to the downside, right? That means it's ready to really sell. Give a little retracement, sold again. So price now started reacting from order block here, right? I expected this guy to be taken out, and maybe you have from somewhere around here, but let's just say it's just this other block.
Hi, sir.
Who the hell
My daddy.
is that?
Yes, sir. Yes, sir.
Okay, price started from that other block there, and it pushed to the downside, right? Let's see. Price started from here, broke structure to the downside. Problem. So price, I told before, Gbpusd has an habit of going back to the other block that originated the whole move. That's where Gbpusd likes to roll. Now, I had this other block marked out. This guy. Now, if you notice, I sent a trade on Sunday. Yeah, I sent a trade on Sunday that this we want to sell from. That then price was here. Think here. Yeah. I had this trade that price good. I say good. Gbpusd would sell all the way from here. I expected that on Monday, price will come and take out this guy and we'll just sell all the way down here. This was my expectations, to be honest. But price never came there. And as at Monday, price didn't touch my POI Tuesday, price didn't touch my POI. When it's like, okay, let's just look for sales and continue pushing this to the downside, right? Let's go to the 1 hour time frame. 1 hour time frame, I spotted all these trades. I was still expecting price to come here. So I didn't trade any of this on Monday. On Tuesday, was after price broke here. Where is it? Now, price broke straight up to the downside the first time one, right? So I love looking for two breaks. So I don't see two breaks. I'm not convinced. Then price broke again the second time. So, all right. So no problem. I did not trade this whole move. But now this is when I started trading. I started trading as Wednesday. As Wednesday. Let's see what I saw. At this point, I knew that okay, price is not coming back here again. After I saw this two break to the downside, I just had this conviction that price might not come back there again. But I did not trade it because I was being careful. So as at here, I trade the move break or structural concept. Example. Now we have this break to the downside, right? Although the break is not clear, we had this break to the downside here. I also had this break to the downside here. So the first break, this was the second break, right? Let's move this guy. I'll show you guys something cool now. We had this first break here, we had the second break here. So automatically, this guy is my key liquidity. Key liquidity. This guy's key liquidity for me. I had the setup. Then I was going to use this other block to sell this market. Why am I not using this breaker block? This breaker block has been mitigated by the what? By the liquidity. As the price has touched it. So this was the POI that was valid. Right? I had this setup. I sent it to the VIP. I sent it everywhere to my friends, my guys. But price, I was expecting price to come here. I expected that New York would come. I said New York. London session would tap in here and sell. But it did not do that at all. I was pissed at when I saw this. Then I sat and I went to the 15 minutes time frame. After that trade has played out, I went to the 15 minutes time frame and I was like, why did price not come all the way down here? Because for this type of push to happen, price must have reacted from somewhere. It must have reacted from somewhere. That's when I came to the 15 minutes time frame and I saw this. That price swept liquidity here. Although I wouldn't have traded it, even though I saw this, I was still anticipating this move because it was an hourly time frame move. If I see a 1 hour time frame structure and I see a 15-minute structure, I will leave the 15-minute structure alone. Then I'll trade the 1 hour time frame structure because the hourly time frame structure is stronger and it's better than the 15 minutes time frame. So that's why, even though I saw this, I wouldn't have taken it. So I saw a sweep here, right? Then price broke structure to the downside. Broke structure to the downside. That was this guy. Broke structure to the downside the first time. I told you I look for two breaks to an extent. Then price retraced. That was liquidity. I think it was liquidity it used. Then the price break against the downside. Yeah, it broke against the downside the second time. So you can see it. Some people might call this market structure shift. No, it's not, you're not wrong. Market structure shift. First pull back liquidity, second break to the downside. Then price now use this POI, 15 minutes order block POI to sell. I did not catch this trade. I did not see it because I was waiting for this guy to play out. I had all my money on that other guy, not on this guy. So I did not even take it. I didn't take that trade. No problem. So when I saw this particular move, right? When I saw this particular move to the downside, when I saw that particular move to the downside, I already told myself that it's going to be a high chance. This one is not even, it's normal experience. Experience is what experience has taught me. I know that when GDPUSD makes this type of move, makes this type of move, because at the point I was trading GDPUSD, I said 2023, 2024, I love trading GBPUSD. So this year, I just integrated more into gold only most times. But I still trade GU, I still trade EU, I still trade a lot of pairs. UGA, GG, all of that. But as of 2022, no, 2023, yeah, 2022, 2023, I was trading GBPUSD a lot because I just started trading forex that time. That time I used to watch this guy, Jeffrey Benson. Yeah, he's a good guy, although one or two things, but I don't use this method anymore. Obviously, I trade SMC now. We define SMC. At that time, I trade GBPUSD a lot, so I was used to its movement. Yeah, same way I'm used to gold movement now. I'm used to GBPUSD movement too. I think I trade GU, mostly GU at that time. Now, if you look at this, I know that if GU falls like this, if it gives that a solid push to the downside, most players does it though, it will always come back and retrace. It will retrace and fill up all these gaps. People that trade FVG, fair value gap concept, price or imbalance, price will come and fill this imbalance. Price will fill everything. And I know that GBPUSD, for GBPUSD, price will react from this other block. From the other block that caused it. That's where GBPUSD used to behave. Now, I dropped a video on other blocks. No, I've not dropped the video. I made the video yesterday. And I'm going to drop it on YouTube today about other blocks. An other block video. So do well to check it out when I drop the link today. That video I explained two things about other block, and you understand why I'm using here these two. When you watch that video, you understand why I'm using these two as my other blocks. That's when you watch the video, you understand. So GBPUSD reacted from here. Was this trade I caught? Was it this trade? Okay, I think it was this one. Now let's look at the structure. I think I found the structure on the 15 minutes time frame. Let's look for structure. Okay. I think I remember what I saw and all of that now. Okay. Now, GBPUSD has given that fall. I'm expecting price to what? Retrace to the upside and fall back. And this was his target, right? This was his target, this guy here. This is what we expected, obviously, right? Now, what structure did I see? Upon knowing that price already reacted from this 15 minutes order block here, yeah, that means this guy will be protected. This guy will be protected. I mean, we don't expect price to come and take out this guy again. No, not anymore. And if you notice the picture I sent, I had two entries on GBPUSD, although the first one played out. So the second one was a waste, to be honest. So what did I see? At this point, coming back here, I can call this guy a sweep. Sweep of liquidity. We swept liquidity here and here, right? So my friend might take this guy as a sweep of liquidity. You're not wrong, but this guy is the major one. We saw a sweep, one. So a break to the downside, two. Told you I love seeing two breaks before I think of anything. This was the first break, and this was the major break here. This was the major break. This was the major break. So I already saw sweep. I've seen breaks. Now, the next thing was for me to just spot out liquidity and pick the valid POI. Right? That was everybody was waiting for now. Spot out liquidity and pick the valid POI. In this case, the liquidity in this case, right? The liquidity in this case is quite complex. So you just have to use your experience or whatever. You understand? You just have to use your experience at this point. Okay. Just have to use your experience at this point. Now, obviously, Obviously, I won't lie to you, but some people might consider here liquidity. Are they wrong? No, they're not wrong, but it's too far. So it might not hold water. That is why this POI. Okay, no, let me know. So I talk about it. I'll talk about it. Come, let me go 30 minutes. This liquidity is too far. Hmm? That is why some of people that had POI around here, hmm? People that have POI around here, let's say they even use this guy. People that have POI around here, they got smoked. Why did they get smoked? Because the liquidity is too far. The liquidity is too far. Some people might even consider this guy here as the liquidity. Are you wrong? No, you're not wrong. You're not wrong. There's nothing like the perfect liquidity. So people might consider this guy liquidity. But look at that. Look at the POI they are picking. This guy. Why? Why are they picking this POI? Because they'll say closest liquidity to POI, I be closest POI to liquidity. That rule works 100%, yes. But you have to be smart about it. You don't just do things anyhow. If the liquidity is not close to the POI in any way, just calm down on that trade. See, calm down on that trade. Maybe because maybe your hand is scratching you, you can take the trade, but reduce your risk by far. You understand? Reduce that risk. Reduce that risk. If the liquidity is far away from that POI, and that is the first POI, reduce that risk because there's a high chance it will not use that POI. Go and study POIs. Those one particular day when you're back testing or whatever you're doing, study POI. And you will notice if that liquidity is far away from the first POI, there's a high chance it will not use it. I did not say it will not. I said there's a higher chance it will not use it. Because there are cases where price will actually react from here. But the experience has taught me that what? There's a high chance it's not use this. That's why I did not mark this POI. Did you get me? Yes. Instead, I marked this one. This guy here. This guy. Why did I mark this POI? This bearish candle. Why did I mark this POI? Why did I use this POI? That's the next question. If you even go to the 1 hour time frame, if the 1 hour time frame, they started from here. Because the 1 hour time frame, the body was what? Long. The body was small. So the 1 hour time frame wanted us to start from here. I marked two positions. I marked this POI and I marked this POI, the other block. Because those were the two guys that GDPUSD would like react from, not this guy. And if you notice, I said something about liquidity. That liquidity is far. In this case, price use this guy as the liquidity. I think they call this engineered liquidity. That's what they call it, Abi. I believe so. I don't know those words like that, but I just know what I see when I see them. I think they call this engineered liquidity, whereby price forms its own liquidity when it doesn't see one. I think that is the reason that price took this guy out. Because normally, on a normal day, on a normal day, so those are your trade candle pattern formation, whatever. This guy is like a morning star. So some people already have their short from here. Short, where's the short position? Some people already have their short from here. They'll say this as confirmation and they'll put their stop loss. People that are conservative will put their stop loss at the high and they won't get smoked. Why people that are aggressive, they start stacking from here and they just put their stop loss around here. So price just forms something like engineer liquidity. It took itself out so that this POI would be expected. I don't know, but it just did that. But I took a sell from here. If you notice, I just drew a line. I didn't do much. I just drew a line. I just drew a line around here. I drew a line and I sent this trade out and I took it. This was the first trade. Short. This is my short position. Short. This was my first trade. I believe this was my first trade. So my first trade, there was a 1 to 12. So wait, this is 1 to 15. Let me say I did not take it exactly from there. Let me say I entered here. I think wait, where did I enter from? Okay, I used the 30 minutes on. Yeah, let's just say I was being a scaredy cat. Because I know that 1 hour on would be better, but I don't want to take that risk of that. I used that. I used the 12 minutes on. I said 12 minutes. The 30 minutes on. I had this trade. The 1 to 12, 1 to 12. So why would I do that? 792 was my stop loss. 792. So they want to 12 now. Why is it showing on to 11 here? No problem. So that was my first trade. Yeah. And I had a position here too. Short. I had another short position here. Just in case price doesn't use that. Right? I had two positions. I had two positions on this guy. So I knew that okay, one of them shall enter. Maybe see anything, one thing. My stop loss was above the protected low. I think this one was like a 1 to 8. But I was praying for the 1 to 12 to enter. And that's one that actually did. And I sent it out to everybody. Yeah, I said this one was like a 1 to 8. So this was the second trend. Now, I didn't know the direction of GBPUSD. And when I saw this whole movement from here, when I saw that price did this, I did not panic. I did not tell anybody to close. I still left. When I saw that price broke to the downside here, price already broke the structure. One. I was sure that I'm not using this guy anymore. So price fell down. Right? Fell down. Most times I preach about taking 1:5 first. Take a 1:5, secure something. If you cannot secure, if you are maybe your body scratching, you can hold. But I always like securing at 1:5 first. That's the first thing I do. At 1:5, I secure something. Now, the second trade and the third trade, how did that come about? After every expansion move, we expect retracement. So when I saw this retracement, I did not panic. So people already closed. Right? So people already closed. I wonder why they were closing. Because after the expansion, of course, price will surely retrace. You just catch the continuation pattern, catch the continuation move. That is how things are done. You understand? So what did I see? That's the next question. On the 15 minutes time frame, yeah, because most times when you are looking for continuations, price is already reacting from here. When you're looking for continuations, you should be out here that what price would form structure on the what? On the 15 minutes time frame. Who is that person? Please, just unmute yourself, please. Thank you. Sorry, I said unmute. Mute yourself, please. Thank you. The guy joined on my screen. Thank you. Okay. Now, what did I say on the 15 minutes time frame? The double break or structural principle. Now, we saw break one, right? Break one here, right? Then that same move that broke this structure came here and broke this structure. Somebody asked me yesterday, I think, some people might wonder, how are you calling this guy another break? This guy is just a candle wick. Look at the chart very well. With experience, when you look at the chart with experience, you will know that wicks like this, see this type of formation, on the lower time frame, it will be clearer. So on the 5 minutes time frame, I didn't need to go to the 5 minutes. I already knew because I have already seen too much already in the chart, something like that. See the 5 minutes one. Can say it's clear in the 5 minutes. Can say it's clear in the 5 minutes. On the 15 minutes, it wasn't that clear. You understand? But no problem. No problem. Everything is with time. With time, if you see things, you feel me? So we saw two breaks. 1, 2. What does that tell you? That the what? the next liquidity, the next pullback or the first pullback that happens is the what? The key liquidity. Simple concept. The key liquidity. Because everybody's liquidity. But which one is the key one? You really want to trade the key liquidity. The key liquidity and the valid POI. That's what I call it. Because this guy here to is liquidity. This guy to is liquidity. So when you say liquidity, the key one, this is the key one. Because the first pullback after the double break of structure, no problem. Which POI are we using? That's the next thing. See, most people they underrate this POI because they think it's easy. Go and study POI. Go and study POI. Okay. I know some people have used this 15 minutes POI here. This guy. They'll say breaker block. And they'll get smoked. Except maybe they cover everywhere. But I know some people that are greedy. That want to that want to take 1 to 1 million arrow. That want to take 1 to 1 million arrow. It's not sustainable. Just cover everywhere. If you want to use a cover everywhere. But that's not the POI I used, obviously. The POI I used was this 15 minutes order block. But this was what the POI I actually used though. Now, let's go to the 1 hour time frame. Is there any POI on the 1 hour time frame? Okay, the 1 hour order block is shining. Yeah, I can see it shining in my face. The 1 hour order block is shining. The 1 hour order block is shining. This guy. But this was not where I entered though. I entered from this guy here. The key level here. That's where I entered from. This key level. But this other block is valid. So I would advise you to enter from the other block. Don't be like me. That other block was valid. So there was no reason why you should not even enter from the other block. Understand? There was no reason you should not enter from the other block. And if you no watch a video on other blocks, you will get one or two things. Yeah. So that was where I entered from. That was my second trade. So you can see 30 minutes here. It even looks pretty nice. So that was the second trade. Let's take the shot. Took a shot here. Send this to the group, to the VIP, not to the group. Yeah, I sent this one to the group too now. Yeah, this was one I sent yesterday. That I said, do you believe? Some of you that did. Oh, 10 minutes. I have to be fast now. Some of you that did, you believed. And you eat profit today. That's if you held. You closed around 1 to 5. Because I secured around 1 to 5. 1 to 8.7. Not bad. Now, some of you that didn't enter in time, where could you have entered? Other block around here. And see this other block around here. I didn't even see this yesterday. See, price broke here one. I didn't see this. I did not take it because I already on the sale, so I don't bother my head anymore. You know, price broke here one, and I think there should be a break here around here too. If you go to the 5 minutes, it might just be clear, right? So this guy is what the key liquidity, same concept, the key liquidity, and this guy is what the POI for you to continue that sale. Look at the other block. The other block is this. The wick is longer than the body. Yes. So you mark from the body. Simple. You take another shot here. I didn't see this. I didn't take this. Wow. How come I didn't see that? I'm sure because I was busy. I left my phone at that point. But I did not take this. I didn't take this. I didn't take this. But yeah, I can take that. So let's just delete it since I didn't take it. It's just you. But that was a trade there, to be honest. If you can see it. Now, the last trade of today. I didn't send this last trade of today. Why did I not send this? Because I didn't see it in time. I think I woke up late. It happened around 6. I woke up around 7. And at around 7, I did not even, not exactly, I woke up around after 7. So I didn't see this in time. I didn't catch the entry. I didn't catch the entry. I had the trade, but I didn't catch it because I don't like limits like that. But I just slept it off. And when I woke up, the trade had played out. No problem. Move on. Now, the third trade, what did I see? We saw a break here, one. You saw this break, right? No problem. So the same concept, GDPUS is used 3 times. Then this break is the most valid one. Although there's a break here, there's actually a break here too. But this break was the most valid one. I won't lie to you. This break here. So we go to 30 minutes time frame. Let's see if go to 5 minutes. Will you see that break very much clearer? I thought you see this break. It's a valid break yesterday. So actually not I was telling you. So a valid break yesterday. Like I said, that break was more fun than this guy. So that break, so the second break, 6 minutes. Come on, do this. So break one, break two. As usual, first pullback is what the key liquidity. Usual. So this was my liquidity, right? Now, which POI did I use? Now, using the 15 minutes order block here, it's not a bad idea. It's not a bad idea. 15 minutes order block. Right? But where I put my stop loss, I'll cover this guy. I won't lie to you. I'll cover that whole guy. But was that the order block I used? I don't think so. I think I used the 1 hour breaker block. But you said the 15 minutes order blocks also give you the same, give you some juice. You feel me? Yeah. I think this was the 1 hour order block, breaker block I saw. This guy. Yeah, I saw that guy. This 1 hour breaker block. Very. I think this was the guy I used. Yeah, not that other guy. But that other guy would have worked. It's the same thing, you feel me? That other guy worked, and this other guy worked too. So it's a win-win for everybody, right? Everybody's happy. Everybody's happy. That is the important thing. You that use 15 minutes, you that use 30 minutes, you that use 1 hour, you that use that. But everybody touch the trade and everybody chop. That's it. The 30 minutes was much smaller. Yeah, 30 minutes was much smaller. And that green line was already the target. And that's how that shot came about. That's how that shot came about. How many people are remaining? 7 minutes. That's how that shot came about. Right? I think it was a 1 to 3.7, like 1 to 4. I'm like, cover this guy all the way up there. Oh shit. So I made this 1 to 4. I didn't take this shit. I didn't send this. I only sent these two. I didn't see this in time. Yeah. So that is how those shits came about. So price has hit its target. Price has actually hit its target right now. Right? You feel me? Price has hit its target. Target has been hit. Now, look at this guy. This guy, you have broken structure here. The first pullback was liquidity. Liquidity has already touched the other block. Liquidity has already touched the POI. That means this guy is the new POI. That's why price is reacting from here and it's selling down. But price has reached my target, so I'm more interested in trading GBPUSD until I see something another time. But I could have taken this and maybe sell to here again. I don't know. But that is it on GBPUSD. That's how those trades came about. And we have about 3 minutes maybe for you to ask any question. We have about 3 minutes to ask question. Question. I'm not hearing you.
Am I audible, sir?
I can hear you now.
Okay.
I'm not hearing you again. Your voice, your distance is cutting.
Thank you so much for this. I got your this link from what's his name again?
Yeah.
His name.
No problem.
Michael
Okay.
Michael Trades. Yes. Thank you very much for this session. Love to have more of you. Yeah, my question is because I actually tend to when I saw the way Michael trades, I saw something familiar because I fellowshipped with Tony Ike's content some times back. So it was a kind of way for me to look at. When I saw it, I was like, okay, this is the way I want to actually trade. And it has actually been working for me. But one issue I've been having is to get a proper double break of structure. Double break of structure. It has always been like an issue for me. And there are some times where there was a trade I was able to analyze. I sent it to Michael also. He said it was very nice. It was Euro USD on I was able to catch the move from last week Friday, the down move, the sell move from on last that happened on Friday using this same concept. But looking at it was a very very long trade. Like it's like what happened from that day till now. Like the sell
Okay.
kept on happening till today. So one of the things I'm having issues with, how do I like, because I was able to get this thing from a swing structure. So a swing structure. But
Okay.
for instance, if I want to place a trade today, and me that I've gotten a swing structure, it's not always easy for me to get like a daily structure because market is always like kind of choppy. I don't know
Okay.
if you understand me, sir.
Yeah, I'm hearing you.
Yeah, so yeah, how do I okay, say I want to trade today and I just go to the market and okay, it's not always easy for me. That's just what I want to like. I want you to help me clarify, sir. How do I like place? How do I say I want to place a trade today, and I'll be able to get that move that same day, sir? Thank you, sir.
Okay, you have less than 1 minute, so I'll be very quick. How can you place a trade? Just go to the market and look for your structure. If you don't see it, you don't see it. Yeah. Like on Monday, I did not trade on Monday, throughout Monday, because I didn't see anything. On Tuesday, I did not see anything as except from gold that gave me serious losses. You understand? So if you go to the market and you see your structure, set your limit, you see everything, that's all. So it's not really a must that you must trade that day or it must come to your entry that day. Ah,